Good morning, everyone. How are you guys this fine Wednesday morning, hump day? Woohoo! Hold on just a second here. I'm going to get you my monitor. Welcome to our open house trading room. My name is Eric Senft. I'm going to be your host for the next hour and a half or so. For those of you new to the trading room, welcome. What you're looking at here is the diversified trading system. And it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Micro Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And bottom right is the Raptor, which is the latest addition to the DTS trading assortment. The Raptor is kind of a combination of the other three tools, the other three birds all kind of smushed into one. This monitor, I'm watching the NASDAQ. I've also got the British pound and crude oil on my other monitor, but I would be happy to take a look at any market which is of interest to you. I know there's probably a few E-mini traders in the crowd that might be looking for what's going on in the E-mini. We're getting an interesting signal here out of the open. Now, a lot of times out of the open, I'm a little reluctant to take a signal. A lot of times I'll kind of let the dust settle down from the early trading. But we're getting a second push on the buy signal here that's developed in our Eagle Trend Trader. So I might throw that in. Actually, you know what? Because it's early, I'm going to dial down the risk on this one a little bit. We'll throw the order in there. The way it's setting up right now, I'm not sure we're actually going to get a fill. We'll see. We need that momentum to reverse again. What has me interested is here the trade forecaster, our handy dandy trade forecaster right here, says that the market should be in trend mode for about 191 minutes. Wow, that's a long time. Let's shoot a couple trend lines across here. And we'll throw a trend line across there. Okay, so you can see we've got a little bit of a channel type thing going on here today. Oh, by the way, this trade forecaster, if you're interested in that, let me get you some of the details on these things. You can find out about the trade forecaster and such right here. And you can find out just about the tools in general and DTS and so on right here. They both essentially end up going to the same place more or less. Okay, it looks like I can probably cancel this order. So let's close that out for now. We're actually getting a first micro-macro cross signal here to the downside on our Hawk. This is normally a very reliable signal. The Hawk Micro Scalper, again, designed to pick up shorter term swings in the price action. And what I'm going to do is I'm going to go to a slightly more conservative stop strategy. There we go. So the first micro-macro cross occurs when the micro line, that's this thin one, crosses over the macro line, that's this thick one, and the whole signal comes into sync. You see, we generate warning dots, and then when the signal is complete, we get the triangle and the hash mark. So everything is all red here. Our filter is red. Our bars are red. Our trend lines are red. Our signal is red. So we kind of have the market kind of feeling things out right now. And you can see we just hit the break-even trigger. The trade automatically rolled to break-even. Oh no! Darn it, scoundrels. Came up a tick short of my profit target. Oh well. So let's look for another opportunity. And Mark is asking about the E-mini. So hold on one second here, Mark. Let me grab the E-mini. Okay, waiting for a trend change signal here on the Falcon swing trader. These lines that you see here on the Falcon swing trader, this is also one of these add-ons. This is the ultimate support and resistance suite, and it forecasts the support and resistance lines for the next day. No, they are not pivot points. No, they are not Fibonacci levels. If they happen to intersect with a Fibonacci level or a pivot point, it's more coincidence than anything. Our trend line has changed color here, so now we're just waiting for the trend change signal, which is essentially that first signal after that trend line change. Our filter is already turned over, our trend line is turned over. Here we saw the sellers force the market down, here come the buyers, and we're looking for the sellers to come back. Oh, and here come the buyers. So a little bit of a mixed bag this morning. This here is what we refer to as a red bar buy off of a hard edge bounce. It's normally a pretty reliable signal in the Eagle. A lot of activity this morning. This is, I suppose I could have waited for the second push on this one as well. We'll see. There's going to be a little stumbling block right here. And I think I might choose to be a little bit more aggressive with my stop on this one. You see, we have 15 different stop strategies here available with our Trade Manager tool. And it allows us to manage the trade. Come on, get up there. Get up there. You know you want to. All right, well, while they're sorting themselves out there, let's take a look here at the E-mini. Let's bring over the E-mini here on the Falcon swing trader. And you can see, oh yeah, they're making a run here at 2100. I was looking at a break above 2100 as a possible buy. The Falcon actually signaled a little bit early here. You see how our swing trader signaled right here? This was our trend change signal. Our trend line changed color. It went from red to green. We started generating warning dots and audio alerts. And then the signal completed here when we got the triangle and the hash mark telling us that the trade is ready to go. So everything is all in sync, our filter, our bar colors, everything. And let's see, the E-mini trades at 12 and a quarter. So let's see if we have reached our profit objective yet. Just about. Just a little bit shy of our first profit target. And it's no doubt this resistance here at 2100 being a little bit problematic. Here is the Eagle Trend Trader for the E-mini. And you can see it generated a signal right here, just a little bit, about 10 minutes after the open. Now this one, here is that red bar buy off of the hard edge bounce that I'm trying to play in the NASDAQ. And you can see how normally it has very good follow through, right? The signal comes into the hard edge of the trading band. This trading band, by the way, gives us our directional bias. So we come into the trading band, the bar colors go out of sync, and they come back with this red bar formation, but a green buying signal, and that tends to be fairly reliable. Here's the counter version of that, the bearish version. Here's a green bar sell. You can see that one too had good follow through. Here's a couple more red bar buys. So you can see why, oh, here's another one. You can see why I tend to favor those high probability signals. And then here, last but not least, let's take a look at the Hawk Scalper. Oh, a very good first micro macro cross signal right here. Now I know you're looking at this and saying, no, wait a minute, Eric, the trend line's never crossed over. No, but everything went out of sync. See, our trend lines went out of sync, our bar color went out of sync, our filter even went out of sync, and then everything came back into sync. And that's what the first micro macro cross signal shows you. It shows you a market that goes out of sync and then a market that comes back into sync. And you can see we would have hit our high probability scalp target already. Compare this with what's going on here. You see all these yellow bars through here? See how our filter is all broken up? That tells you that you have a market which is out of sync. So when this market gets out of sync and then comes back into sync with your first micro macro cross signal right here. So it's the first signal, the warning dots, triangle, hash mark. This is the DTS system telling you, yeah, go ahead, this signal's ready to trade. I don't know if I put my stop quite that tight, but oh, there we go. Hit our profit target. So far we're looking a little bit on the bullish side. Looks like we would have, did we reach our profit objective here on the E-mini trade? Yep, just hit our high probability profit target on the E-mini. So that would have been a nice little short-term swing. Now you also have the option, you can see I'm going all in, all out on target. You can split up your trades. Say you wanted to only take half on target. So I'm going to take 50% on target, and I'm going to leave some in as a runner. You can see how DTS split it up here. I've got 50% on target, 50% as a runner. I'm trading 3 contracts, 50% of 3, of course, is 1.5. The trade manager rounds down, so I would have banked profit on 1 and I would be running 2. Although I'm not liking how long this is taking to rally. The longer it takes to get above here, the more likely we are to see or perhaps see a reversal. Mark's asking, where can I learn more about the red bar buy signal? On the website links that I gave? No, not really. There are videos on our YouTube channel where, I go over these types of things. They're actually just recordings of our trading sessions. And then, of course, for the DTS owners, we have a trading room. The room is on hiatus, but it will be resuming very shortly, next week, as a matter of fact. And we go over all these things in the trading room all the time. That's part of the reason for the trading room, is to help educate owners on how to use their software. A little bit of a struggle going on here this morning. Look at all these yellow bars that are cropping up here on the swing trader, or pardon me, the scalper. So when this gets out of this mess, and currently we're a little bit more bullish, so I would expect a first micro macro cross to the upside. Might give that a flyer. And here we are on the Raptor. We're coming out with a potential buy signal. You can see we've got the warning dots. The Raptor, we have a slightly different system for entering trades here on the Raptor. This one is called the Trailblazer as opposed to the Trade Manager. And the chief difference between these two tools is that the Trailblazer is more of a one-click feature where all I need to do is enter my entry price, and so long as I have my stops activated, I've preset my profit targets up here. If this trade triggers to the upside, you see I can anticipate the signal completing and giving me a triangle and hash mark because I've already got my warning dots. And yes, you can change the bar colors. Some people don't like the magenta and blue bar colors. So if this signal tripped and engaged my order, I would automatically, Trailblazer would automatically place my exit stop as per my stop strategy and my profit targets. So it's a little bit more, like I said, a one-click type feature. All right, and that's starting to reverse. I'm thinking we're going to see a little bit of a decline here now, but before we go over there, we are getting a possible red bar buy here on crude oil. This is also on our Eagle. You can see we've got the hard edge bounce, the trend still up. We're getting a chance at a second push on this entry, which is nice because we can look to enter above the high of that bar. And what I mean by second push is the signal has printed, right? The signal is printed, and now the bar is retreating from the signal. So we're currently trading down here. We're going to need some renewed momentum in order to fill that. All right, so there's a possible red bar buy on crude oil. Crude in a little bit of a mix-up because our Falcon and Eagle, sorry, I'm calling the birds the wrong name. The Falcon swing trader looking a little bit bearish, right? Because our trend change, our trend line is red. We might come back here with a sell signal, and the Hawk scalper also looking a touch bearish. At least short term. Okay, our trade just shy of the break-even stop. Now, the nice thing about the trade manager, and I see there's some questions here, folks, and I'm going to get to those in just a moment. The nice thing about the trade manager is that it always controls your risk exposure. So you're never risking more than you can afford to lose. Let's say, for instance, we're looking here at this first micro macro cross signal. And, you're looking at this and you're saying, gee, I don't know if I should take that. This market is awfully sideways. Well, currently I'm risking 2% of my account. So the first thing I can do is dial down my risk amount. Say I'm only going to risk 1%. But more importantly, watch what happens here as I place my entries. Let's say I'm going to set up the trade like this. Okay, my risk amount is $200 and I'm trading 4 contracts. What if I set up the trade maybe with my stop down there? Oh, look, my risk is still about $200, but look at what's happened is my quantity has changed. So Trade Manager will never ever allow me to risk more than I can afford. What if I wanted to run my stop way down here? Oh, Trade Manager says, no, no good, you can't afford that. That's more money than you can afford to lose. So here we are, we're working a first micro macro cross signal. I'd probably, signal is retreating a little bit. I'd probably place my stops below that swing. And if this looks okay to me, then I'd give it a go. Now, if I'm just going to run a single, maybe I'll go for a runner on the whole trade. And if I get lucky and the market lights up, well then, fantastic. I caught a good little move. But even if I had gone for the full 2%, it would still only be 2% of my trading capital. So let's say you're trading a $10,000 account, 2% would mean that Trade Manager would restrict your risk to only $200. Well, honestly, if you took a $200 hit on $10,000, that's not going to ruin you, right? That's not going to decimate your account to the point you can't trade anymore. But if you took a hit, say for $2,000, well, that's a little more problematic. Oh, and they slipped us a tick on the entry. Not liking that. Let's see if we get a little bit of follow through off of that. So I've been using the break-even feature a little bit more here with the Trade Manager. You can automatically set a break-even order. So if the market trades to 44.11, it will automatically grab my stops from down here and roll them up to break-even +1. So at least the broker gets looked after. Okay, I know some of you have posted some questions here. Let me get to your questions real quick. Good morning, Jim. Jim's one of our members. He's in the room this morning. He says the bank index is looking really strong. Good to know. Thanks, Jim. Jim likes to give me the play-by-play. He likes to watch some of the secondary indicators, advanced decline, the bank index, and so on. Michelle is asking, she says, hi, Eric. Just a short question on the hawk. The signals for buy and sell, on what are they based? Okay, so here's our hawk. You can see we just hit our break even, just rolled up, and I think it's about time that I look at a different stop strategy. Maybe we'll go with the parabolics. There we go. So we'll enable those. And while that's going on, maybe I'll bring this one over here. This is the E-mini. Okay. Honestly, Michelle, there are about a half a dozen parameters that need to be met, algorithms and so on, working in the background before signals generate. What you see on the screen has been provided so that you can make decisions. We experimented with simple, I don't want to call it black box, but for lack of a better term, uh, black box signals where the system would just say, it would just print a signal, let's say it printed a signal right there, and that was it. You just had the regular bars, no other features, just price, and then it printed a signal. And then a little while later, you would get another signal. And again, it was just the bars, nothing else, no filters, no nothing. And we found that people were uncomfortable with that. So we offered a little bit more of the information, because what was happening is people were actually throwing moving averages and stuff on their charts, and because the charts just looked too naked to them. So what you see going on here in the price activity with the moving average lines and such are some of the requirements, but what you don't see are things that are going on behind the scenes. There is actually price action filters built into tools like the Hawk. And what that means is that price has to do certain things in order for a signal to develop. There are certain momentum filters. Because this is a scalping tool, momentum has to be at a certain level, otherwise the Hawk is going to say, no, it's not a true scalp. And the same is true for tools like the Falcon here, which has its own set of variables that need to be met. And again, the trend line and the filter, it's really more for the user, the end user, so that you're a little bit more comfortable with what you're seeing. But again, in behind here, there's a lot of things that have to be met. There are certain, again, momentum filters that need to be met, different than the ones for the Hawk, not just the same ones for the Hawk that have been increased, but entirely different parameters. And the same is true for the Eagle Trend Trader also. Each, unlike just, taking a 5-minute chart for scalping and a 30-minute chart for swing trades and a daily chart for trend trades or whatever, that would be a very crude approximation. These tools are actually all individually programmed to respond to their certain market environments. I was just looking down here, looks like we hit our break-even filter and got stopped around break-even on our Eagle trade also. Well, we'll see whether or not that was a good thing. So I'll make a note in my trading journal to see whether or not I should have left that one hang a little bit before the next swing, or whether that break-even stop was a good idea. A lot of times I like to see immediate momentum on a trade. So if I get stopped at break-even, yes, it's annoying. Yes, only the broker's getting paid. I get a really nice Christmas card from the broker. So Michelle is asking, it looks great, but do I have to trust it blind, or what's behind? Well, you kind of have to trust it blindly, and I'll tell you why. There are, and I know, Michelle, you've been in the room here before with us, but what I'm going to show you, some of you will have seen already, It's more for those folks who haven't been here. We do have, like the Hawk cheat sheet, where it's going to highlight which signals are your higher probability signals, right? Which signals you're going to be most interested in taking. So we have things like the first micro-macro cross, the macro pullback, the 4-arrow consolidation, the post 4-arrow consolidation, the red bar buy, green bar sell. So these are actually the signals that you're looking at. But as far as changing settings or customizing anything like that, no, the programming is locked, except for the Raptor. The Raptor you can tweak a little bit. And the reason we've done this is because we have, these birds were in testing for about a year, refining their settings, making them work. And what we found, again, is that people would take them when you could adjust the settings. They would take them and they would tweak them, and then they would no longer work as they were designed. And now I know you might say, well, I'm paying the money. Shouldn't I be able to do with it as I will? Yes, but what would happen is people would tweak them so out of shape, then they come back to us and say, well, it doesn't work. Well, yeah, it doesn't work because you've tweaked all the goodness out of it. So, no, the programming itself is locked. You do need to trust it to a certain degree, but that trust also comes from usage. You know what, folks? If you are not keeping a trading journal, do yourself a favor, get yourself a notebook, and keep a journal of your trades. I don't care what system you use. A trading journal will help you become a better trader, plain and simple. It costs you nothing except a little bit of effort. And what journaling your trades will do, Michelle, is that it's going to give you confidence to take the first micro-macro cross signal. It's going to give you confidence to, where can I find well, here's a red bar buy. It's not our favorite signal, but this one worked out. Here's a little red bar buy, hit our profit target reversed. Here's the first micro-macro cross signal. By far the highest probability signal that the Hawk produces. Another first micro-macro cross signal. And what journaling is going to do is it's going to give you confidence that when you get that first micro-macro cross signal, here's a macro pullback signal. Again, a high probability signal. Yes, you took a little bit of heat, but it eventually came down. Another first micro-macro cross signal. So when these signals print, you're going to have the confidence to take them. Now look, here's a first micro-macro cross that I believe failed. What? A room moderator showing me a trade that failed? Yes, I know. Let's see. We probably came up. Did we hit our profit objective? Oh, just came up short and then reversed and stopped us out. Might have been close enough here to hit our break-even stop. But even if we didn't, remember, we're not risking more than we can afford. So, you know, the signals, they're very good. They're not 100%. So I don't want you to believe that they will be 100%, but you know, here's a red bar buy, exceptional follow through. But as you gain confidence in using the signals, in recording your trades, you know, look at this first micro macro cross from the other day. Huge follow through. Macro pullback signal, huge follow through. Well, this one was a little trickier to take. I would have been waiting for a 4-arrow consolidation here. But by recording your trades, by focusing on the higher probability signals, you're going to get the confidence that you need to trust the signal. I guess that's what I'm trying to say in a rather roundabout way. Yeah, Mark's asking about that red bar buy signal, whether there's a specific YouTube video for it. No, not at the moment, Mark. But you know what? I will put something together. Just made myself a note about that so I don't forget. Michael is asking, how do you set break even? Very simple, Michael. You go here to your strategies window and you highlight your trade manager, because your trade manager is a strategy. Now remember, before you make any changes to your trade manager, you actually have to turn it off first. So we go to our Enable tab, turn it off, click Apply, trade manager disappears, and now we can change our settings. So you roll up here to the very top and you see auto break even parameters. Enable, disable. So if yours is not currently turned on, it's going to say false. So change that to true. And then set your break even trigger. So I currently have mine set at 15 ticks with a 1 tick offset, which means it's going to go to break even plus 1 after the market rallies 15 ticks. If I want to take a tick for myself as well as a tick for the broker, well, then I can go break even plus 2. And then when everything is to your liking, you can go back down here to your Enable tab, go to True, Apply, and voila, there you are. Now when I set an order, and I'm just showing Michael this, when I activate the order, oh, actually, I guess it's got to fill first. So 1 second here. So as soon as the order activates, you see I get my automatic break even. 15 ticks later. So we're a little bit sideways at the moment. Oh, see, while I was looking the other way, showing you guys something, we did get that raptor signal finally emerge from here. And probably got high enough to hit our profit objective, which is 20 ticks. That's our high probability profit target. So it looks like we've went up about 4 full points, so that's at least 20 ticks. And now we're sideways again. Okay, let me see about your questions. Bryce is asking, I see you're in a trade. How come we can't see your profit loss on the trade? We used to be able to. Well, we have this option here of cycling through the profit loss. I find it distracting, so I normally turn it off. If you like to see it, then you can certainly turn it on. Okay, good question here from Andy. Andy is asking, he says, hi Eric, after placing a limit buy or sell order, is there a feature in Trade Manager that will automatically cancel the order if not filled at a certain time? The reason, if the computer crashes while the order is waiting to be filled? No. No, if your computer crashes, you're going to have to go to, hopefully, and this is a good point that Andy brings up, you should always have a contingency. You should always have a fully charged cell phone with your broker's number speed dialed into it. Um, some people I know like to have a laptop computer as their backup system. You need to have some sort of contingency, because your best course of action if you get something that fails is to go to your control center and hit your flat everything button, which will cancel all your open trades if you happen to be in panic mode. But no, if your computer goes down, the order that, oh, hold on, Andy. I got a little bit ahead of myself because you said a limit order. No, you'd be all right. If your computer crashes and the order did not get filled, so let's say, for instance, Andy's saying, and I apologize, let's say Andy's saying, okay, if the market hits 44.08, I'm going to sell. So what Andy's going to do is he's going to go in with a limit order at 44.08, and he's going to run his stop maybe up here to 44.10. And Andy says, what if my computer crashes right now? Well, if your computer crashes right now, oh, and you submit the order. If your computer crashes and the order does not get filled, no, it does go to the exchange. This order is at the exchange level right now. You see, it is working. Oops, sorry, that's crude. It is working right there. So that order is at the exchange level. So if your computer goes down, you need to have a way to cancel it. And usually the easiest way, most brokers provide emergency phone numbers and such to get to the order desk. If you had placed the order like this, and you had not clicked the submit button, and your computer crashes, nothing happens. You'd be fine. But as soon as you hit that submit button, everything goes live. And then once the order fills, however, Andy, let's say you set up to sell, 44.08, cover 44.09, you hit the submit button, the order goes live. As soon as you're brought in, as soon as the order activates, your stop loss and profit targets are also active. Okay, so if you are in a live trade, your other two orders also get hit, so you don't necessarily have to panic too much. But yeah, that's a very good question. I'm glad you brought that up. Here we go with another red bar buy. Do we want to try this one again? So here we go, red bar buy. I've dialed down the risk amount, so it's not a real big deal. I wonder if I should use the ATR as my filter this time. No guts, no glory, right? We'll cover it below the swing. So we're on the other side of the trend line. The market's getting a little bit flat, as you can see. A little bit of sideways action going on. The Falcon still trying to turn over here, but overall, see, look at our filter down here. Look at our trend line. It's like a really bad roller coaster. This tells me this market is sideways. It's choppy. Normally, what I do when I encounter a choppy market, I don't trade it until it gets outside of that choppy range. So if you're trying to follow trades this morning, I wouldn't touch this market until it gets outside of this range. You're asking for it, really. You're just saying, come beat me up, please. Pretty please. Mark, very observant. Mark says, I see tick differences between the NASDAQ, crude oil, and the E-mini. are these what you've decided to be optimum for each particular instrument? For example, the E-mini is only 4 ticks. Yes. Now, 99% of the markets you are interested in trading, usually those markets which trade at $10 a tick or less will have a 6-tick brick on the Hawk, 8 ticks on the Falcon, 10 or 12 ticks, it's your choice, on the Eagle, and 8 ticks on the Raptor. Instruments that trade at $12.50 a tick, and unfortunately the E-mini, being one of the most popular markets in the world, has to be trading at $12.50 a tick. These brick sizes will be too restricting. In other words, what you're going to do is you're going to open up your chart and you're going to see daybreak lines like this. And this is supposed to be a scalping tool, remember. And you're going to look at this and you're going to say, whoa, I'm getting like 1 signal a day. So it's hardly a scalping tool. So for that reason, because, and by the way, if you look at your market and your daybreak lines are this frequent, you're going to need to adjust your brick size. Very rare, but like I say, with the market like the E-mini, we've actually here on the Hawk, we've dialed it down to 4 ticks. And you can see this looks a little bit more normal now. So here's the session break line. You can see here was yesterday's activity. So this is more what a scalping tool should provide you with. Right? Here's the daybreak again. Here's the day before. So for instruments that trade at $12.50 a tick, we recommend 4 ticks on the Hawk, 4 ticks on the Falcon, 6 ticks on the Eagle, and actually most of the time I still go 8 ticks on the Raptor. Crude oil goes with the default settings of 6, 8, and 12. So here crude oil chugging along a little bit on our Eagle trade that we took a little bit earlier. Not making huge progress, but they're trying. Most of the market kind of sideways at the moment. I don't know if they're waiting on a report. Oh, good. Yeah, Andy says he's got that contingency plan in place when his computer crashes. Everybody should. At the very least, make sure your cell phone is charged and that you've got your broker's number in there. David's asking, can I see crude oil on the Raptor? Absolutely. Hold on one second here. Dave, load up crude oil on the Raptor. Here we go. Let me dial that over a little bit to enlarge it. So, well, we had a double pullback signal here just prior to the open, crude oil's open. The double pullback is, as the name suggests, a double pullback normally goes into the hard edge. Regardless, it comes out of the cloud or the band. This is actually borrowed from the Eagle trend trader, and it generated a buy signal right there about an hour before the North American Open. A little bit of a rally, has since retreated back into the hard edge, came out with another buy. What I like to see, I don't like to see the yellow bar buy so much. I fully expect that we might see a full-on blue bar buy here. Something like, let me show you a little bit more what I'm after. Something like this. This tends to happen as the market gets into this trading band, comes out. You can see it might go back into the band a little bit, and then it will come out and it will give you a blue buy, a blue bar buy. So here we actually had two close to each other. And a little bit of follow through there. Crude oil for the most part in a little bit of a rally mode. So that means the gas stations will be anxious to raise fuel prices again at the pump. So here's another double pullback. You can see it came out with a buy. Nice follow through there. Another double pullback, not quite reaching the hard edge. Oh, triple pullback. Did it come out with a buy? Yeah, right there, came out with a buy signal. So with the Raptor, we tend to look at the band for our directional bias. And there's certain things that we like to look for. The double pullback being one of them. We also like to see the first signal after a trend change. So let me see if I can dial this back far enough for a trend change signal. Well, where is there one? I suppose this would have been it here, kind of just on the cusp as the trend band was changing over, we generate a signal. Normally this signal would occur probably somewhere right around here, make it a little bit easier to take. With the Eagle, with the Raptor, I also tend to pay attention to the swing points of the yellow bars. I like to make sure that in this case they're still swinging lower. See, lower highs. Gives me a little bit more confidence when we get that sell signal. But yeah, even crude oil, a little bit slow. Oh, a little bit slow, Eric. Today is Wednesday. It's crude inventory day. That's why they're moving a little bit sideways. And reluctant. So what we'll do sometimes with crude, let's bring the Falcon over here. You can do this on the Raptor as well. I'm just going to do it on the Falcon because I can use my OCO order. Or actually, you know what? Let's do it on the Raptor today. I'm always doing it with the Falcon. Where did you go? Okay, so here's crude oil. I'm going to use the Trailblazer just because the Trailblazer tends to be, oop, it's already on there. The Trailblazer tends to be native to the Raptor. You can put, I'm sorry, I'm trying to do too many things at once here. You can put the Trade Manager on the Raptor as well. And likewise, you can put the Trailblazer on the other tools if you prefer. Okay, so with the Raptor, it's important to remember that your orders are live the moment you put them on your chart. And I think I'm going to change my default brick size or my auto stop. So when I'm going to go up here, you see invalid trail stop. What that means is if the market fills against my intended stop, it's only going to give me a 10 tick stop. Well, that won't be enough for crude oil, so I'm going to go with 20 ticks. And let's turn this back on. All right, so I'm going to go with something a little bit more conservative, maybe the chandelier stop strategy. It's going to give me a little bit more staying power. Now with the crude inventory report, what I like to see is I like to see a market that's moving sideways, which this one definitely is. So what I'm going to do is I will enter a buy order above the top of this trading range, put a sell order below the bottom of the trading range. And because these orders are live, I tend to place them away and then pull them in to where I want them to be. Oops, and I think I need to redo this because I don't want to have a profit target. You could have, well, actually, you know what? We're in sim mode. Let's live a little. So what I'm going to do is I'm going to place 2 orders. And we will grab profit on one and trail the other one. And what you're going to see in a couple minutes time here is the Trailblazer will automatically place a stop for us and manage our trade according to our stop strategy. Now I'm going to get my parabolics handy here because if this market really lights up, I'm going to switch to parabolics, which will be more aggressive and capture more profit. Oh, and the other thing I should do is I should go in with a limit, a buy stop limit. Because crude oil being crude oil, oops, wrong order. Because crude oil being crude oil is not above giving us terrible slippage. There we go. Okay, now I'm set. So I've got my buy stop and sell stop limit orders in place. I've got my profit target set. I've got my order ready to be trailed. Now we'll see how fast they come out of this report. They might well just gap the whole thing and not even bring me in. So you can set your stop limit ticks here also. I set it at 1. Maybe market like crude oil would be better to set it at 2. There we go. There's a couple of ticks for them. Mark is asking, David says, yeah, it's the missing barrel report. I like that. Mark is asking, is there a trading room offered for the Raptor like there is for DTS? I try to cover the Raptor in the DTS room. It's part of the DTS system. And we do have a few owners which are Raptor specific owners. Okay, now that was just craziness. There's an example why you don't usually trade the crude inventory. Oh wow, what a ride that was. So let's see if we can do an autopsy here, see what happened. Will it give me the text and marker? So let's see, I was looking to enter below here, so they must have brought me in. How did I get tagged though? I didn't get tagged until right here. Well, I guess that must have been the difference of $150. Oh well. Sometimes it works to our favor, sometimes not so much. That's the thing, of course, with the crude inventory is the false breakout, right? It is not beyond crude oil to give you a false breakout and then head the other way. Fun to watch, not always so much fun to try to trade. Oh, sorry, I missed Mark's comment about the crude on the Eagle. He wanted to see how it unfolded here. Same kind of nonsense. Let's see, where did we get in here? We bought right here. They just blew through the stops, challenged the bottom end, and then quickly recovered and came out. Now we did actually get a proper buy signal, a couple red bar buy here signals also. They would have been impossible to take because it just, well, you saw how quickly it unfolded. Yeah, like Jim says, the market's very mixed up at the moment. All across the board, the stock indices just content to move sideways. People always ask me, Eric, how do you trade a choppy market? You don't. Honestly, you don't. This market, even though it looks like a mess, is perfectly content. The NASDAQ is very happy at 4407. It has no intention of moving higher or lower. Yes, you can try to trade in here. I know there's going to be guys that say, oh, well, you can sell the resistance and buy the support. Yeah, sure you can. Absolutely. Go for it. It's your money. You can do whatever you want. But for me, the way I like to trade personally, I find this aggravating. You're taking signals, you're not getting follow through. The market's just congested. Yeah, there was a first micro macro cross here, a little scalp that worked out. Macro pullback signal didn't go anywhere. Could have sold the red bar buy as a failure, but that's just working too hard. There's enough markets out there. If you have one that isn't behaving, go do something else. Come back for the afternoon session. The afternoon will probably shake up a little bit. Or dial in a different market. Let's see. Speaking of different markets, let's see what's going on with soybeans this morning. Yeah, like Jim says, death by 1,000 paper cuts. Trying to trade this mess. See, look at this. There's always a market. Here's soybeans. Look at the nice move in soybeans here, right out of the open. First micro macro cross signal. You know, the nice thing about the soybean market, if you guys are ever looking for another market to trade, soybeans are great. Look at this. They pick a direction and they stick with it. Sometimes the hardest part is just waiting for them to settle on a direction. So there's soybeans in the Hawk. Here's soybeans on the Falcon. Nice little trend change signal right here. Notice the trend line changes color. Here's the up portion. Here's a little bit down portion. And then we come back with a buy. And they haven't looked back since. What's that little move worth? So we bought in there, covered it down there. Well, there's a little $500 move for you. Nothing wrong with that. And likewise here on the Eagle. Okay, now notice how I was saying about the daybreak lines. If I had a bunch of daybreak lines getting really, really close together like this, I would have to maybe consider adjusting the brick size. Now, markets will go through periods of consolidation where they just get a little bit quiet. And it looks like, see, this is what a normal day on the Eagle in soybeans is like. That's okay. But currently, you know, we're getting a little bit of consolidation going on. So I'll just recognize that soybeans are a little bit quiet. But this morning, again, very solid signal. Just your basic in sync buy signal. And there too, probably would have bought it there on the other side of the ATR, covered it below the low. And you can see we have a little bit more aggressive profit objective here on the Eagle, but we're currently up about $500, which is nothing to sneeze at. Michael is asking about the support and resistance lines. He says, I don't have those. Where can I go to get those? The Ultimate Support and Resistance Suite is available at that link right there. I'm very pleased with the Ultimate Support and Resistance Suite. That's the name that we gave to the support and resistance lines here. We've pretty much got the market contained between secondary resistance and the median line right now. Look at this, the primary resistance line has skewered the market right through the middle. Slightly bullish, but just barely. Well, not much going on at the moment. Crude oil simmering a little bit after that explosive rally out of the report. The NASDAQ might fire another signal here, but you know, honestly, it's not worth trading unless it gets outside of that range or until it gets outside of that range. See what the British pound is up to. Oh, British pound making a little bit of a move to the downside. So we had a trend change signal early on here. Again, the trend line changes color. We have our characteristic down, up, down pattern. Oh, we even had a triple dot on the highs. That's unusual. Nice follow through on that trade. Came back with another quick little trend change signal through here. You see everything went out of sync. And falling off again. And a late filter entry signal. This is interesting. The late filter entry signal, very strong signal here on your Falcon swing trader. It occurs when your trend line does not change color, but your filter goes out of sync and comes back into sync. Very high probability signal. So looks like the British pound in a little bit of a tailspin at the moment. Yuck. Well, this is very suggestive of a busier afternoon. Let me just see if there are any reports pending. No, nothing that should hold the market up. Oh, there is an FOMC announcement later this evening, but that shouldn't be enough to tie up the market this bad. Hmm. Okay, well, what do we talk about now? Ooh, Tom is a brave soul. He says, do you ever trade live cattle? Let me see if not on an intraday basis. Let me see if that's even part of my assortment, my data assortment. If I can get a live cattle data feed, I will put it up here. Oh, what do you know? I can. Okay, so here is live cattle for your viewing pleasure on the Hawk Scalper. I'm wondering whether I would dial down the brick size a little bit here. I'm thinking that I might. Oh no, although that day looked pretty normal. See, normally what I like to see is I like to see the session break line pretty much span the width of the chart. And after that, I like to make sure the signals are behaving the way they're supposed to. So I'll find my first micro macro cross and see whether it works out. Here's a macro pullback. Did it work out? Yes. So if the signals are behaving the way they're supposed to, then I know I've pretty much got the right brick size. And you can see a nice progression there, and then they changed direction, and now they're making a run to the upside. We had a first micro macro cross here this morning, and now they're just kind of taking their time. Let's see if I get a correct valuation here. Yeah, it looks like everything is working properly. Yeah, I don't trade the meat markets that often just because they are, what's the word I'm looking for? Oh yeah, crazy. It's just like cocoa. Oh my gosh. I can count on one hand all the cocoa trades I've done. Oh, Phil. My good friend Phil, who I've never met from Australia, he's always a cut up. He says, maybe you could sing. That's a good one. Michelle is asking, Eric, which website are you looking at to see if there are announcements? Don't tell Adam this, but I checked the Forex Factory. They're actually they're pretty good for that sort of stuff. Hold on a second here. I think they're kind of like the standby for this sort of thing. They list all the reports and everything that are supposed to be due out that day. Most of these you can ignore. But if there's any real big ones, like, crude inventory, if you forget that crude inventory is out, or if there's a big FOMC meeting or something like that, they'll be highlighted there. But I tend not to get too mixed up with reports, as those of you who have been in the trading room know. I might as well show you the money expert. Uh-oh, what's wrong with the money expert? Uh-oh. Okay, hold on a second. We gotta take this over here. Let's see if I can fix it. It was working fine the other day. Maybe I need a different browser. There we go. Okay, I got it fixed. We might as well fill up the rest of the hour. I'll go over the money expert tool because the markets aren't doing very much right now. And for those of you who haven't seen this before, let me shoot you the link. You can play with this on your own. Now, the money expert is it's a great tool for helping you realize the importance of position sizing. You see, most traders are obsessed with entry signals, right? Like, let's be honest, you probably spend 99.9% of your time trying to refine your entry signal. right? Trying to filter out those bad trades, those losing trades. And that's not where the problem is. That's not the reason you are losing money as a trader. To be a successful trader, you need to have three things. You need to have a good entry signal. You need to have a way to manage your trade, and you need to have correct money management. Most people, as I mentioned, solely focus on the entry signal. Some people will actually consider a stop management strategy, how to manage the trade once they're in it. But very few people ever take a look at money management. And yet, out of the three, this is perhaps the most important, as you're going to see in a moment. So most people, in an effort to be conservative traders and not blow up their trading account, will say, oh, well, I'm only going to trade one contract. And that's okay. That's a good way to test the waters. I encourage you to do that. But you will never make a living as a trader trading only one contract. I'm assuming that that is your goal. If your goal is just to supplement your income, and there's nothing wrong with that goal whatsoever, then go ahead, just trade single contracts. You can see here Joe started with $10,000. He made 100 trades just using single contracts. He did very well. He ran that $10,000 up to $17,000. That's exceptional. But, you know, not really enough to live on. Well, $7,000 over, that probably would have taken him about 2 months. That's not bad, assuming he's doing a couple trades a day. But if he had used position sizing and he had correctly capitalized his trades, he would have taken that same $10,000 and run it up to about $50,000. Now, I know you're thinking, yeah, right. Okay, but it's true. And this is what is the great thing about this tool, is that it allows you to do this for yourself. So let's say you start with a $10,000 account and you are only profitable 50% of the time. Think about that. Your entry signal is only correct 50% of the time. But you're restricting your losses to only 2% of your trading capital. So how does that work out? Well, you can see, well, actually, let me go to a different one. That one's not bad. Oh, here you can see you and Joe were lockstep. Position sizing didn't provide you any advantage in this case. When Joe won, you won. When Joe lost, you lost, and you both lost the same amounts. That's rare. That one's a little bit skewed. I'm trying to find one that would be very realistic. Okay, this one's pretty realistic. You both start with $10,000, and for about the first, looks like 50, 60 trades, you're moving pretty much even with Joe. But after that, you start to break out a little bit, and you start to make more money than Joe because the position sizing is starting to take effect. So Joe took 10,000, ran it up to, looks like about 14.5, but you would have done a little better at 16.5. You would have made $16,500. Let's try this again. Okay, this one's fairly realistic as well. So Joe takes his 10,000 and runs it up to about 13,000. That's actually very realistic. And then you take that same 10,000, but because of position sizing, you're able to increase it to about $17,000. So you actually make another $4,000 more money than Joe. You see, this is why Wall Street gets nuts if they find a system that works 50% of the time, because they know how to manage money. They know how to manage risk. So that they can take that $10,000 in that 50% system, and they know they can run it up to $17,000. Now notice here, you win when Joe wins. You lose when Joe loses. And some of these drawdowns are more significant than Joe's drawdowns, right? Like this one here, that's rather steep. This one is a little bit steep too. And you can analyze the trade here as well. You can say, okay, well, Joe's actual was 13,300. Your actual was 17,250. Joe's gross losses were 43, just shy of $4,400. Your gross losses were 13,250. Joe's average winner was $180. Your average winner was 476. That's where the difference is. Now look at the losers. Sure, Joe lost less. His average loser was only $80, but your losses were always restricted to only 2% of your trading capital. So you never lost more than you could afford. Your average loser was $200. Now look at these winners here. You're going to notice that none of these are huge home run trades. Oh, this is the biggest one here, $400. That is odd, because when I spoke to the programmer, he said that he restricted most of the trades, the winners, to about $200 or $300, which again would be very realistic. But you'll see that most of these winners are moderate winners, right? $100, $250. $100, $250. Here's one for $300. But look at what happens with position sizing. There's a $300 winner, but by this time you were in a position where you could take 3 contracts. So even though Joe made $300, you made $900. Are you starting to see how this works? Yes, Joe might have lost less at 62.50. You lost 187. But when Joe wins, he wins 300. Woohoo! That's great. Nothing wrong with that. But you make $900. So it's one thing to restrict your losers, but when you're restricting your winners, you can't make any money. You can't make any profit. Now watch what happens if I start to play with the risk percent. What if I start risking, say, 10% of my account, and I only have a 50-50 system? And this is what a lot of people start to do in real life. They wonder why they blow up their accounts. Look at this roller coaster. Doesn't this seem a little bit more like what your trading might be going through? Joe starts with 10,000 and it looks like he finishes with about 12. You start with 10 and you finish with, a little over 14. So you did better than Joe, but look at this roller coaster ride you were on. At one time, you dragged your equity down to only $4,000. Thank goodness you had a few winning trades, or you would have bust your account. And this is what people do. I've met people who have blown a $20,000 account in a single session. How do you do that? You do that by risking a disproportionate amount of your trading capital. Okay, here you caught a lucky break. You caught more winning trades than losing trades. But look at this. In theory, this wouldn't really happen, or this would be difficult to make happen. Let's put it that way, because most people wouldn't have the nerve to risk $2,000 every time out. But if you did, in theory, you could have ran that $10,000 up to $45,000 in a relatively short time. But look at what happened. A little while later, you're back down to $10,000. So you blew up a $45,000 account. You came back to $10,000. And if you don't think this can happen, I actually met a person. He came to me for coaching, who on his very first trade ever, he traded rice, of all things, rice, ran a $10,000 account up to $50,000. And he thought, hey, this is simple. I'll be a millionaire in no time. Well, by the time he came to see me, that $50,000 had dwindled back to $10,000. And this is why he was doing it. He was risking an inordinate amount of his trading capital. Now let's say you risk a proper amount of your trading capital. What if you have a system that performs, say, 55% of the time? Look at that. And like I said, this is why Wall Street goes berserk if you can go to them with a system that performs 55, 60% of the time. And this is why you need to be suspect of all those spam emails that hit your inbox. New system performs 89.7% of the time. Yeah, if it works so great, why isn't Wall Street using it? Because Wall Street knows that most systems will perform 50 to 60% of the time. If you're scalping and you're running break-even stops and that sort of stuff, you can easily run your winning percentage around 75, 80% without even trying. But for average, longer-term trades, if you're running 55, 60%, you're doing fantastic. In fact, one of my most profitable months ever, I was only running 50% on my trades. Half my trades were losers. But because I had correct money management, it was one of my most profitable months ever. Now look at this. Here you are again with Joe. You're about 40 trades in before you start to see a little bit of a difference. And Joe takes his 10,000, runs it up to 16,000. Fantastic. You take that same 10,000 and run it up to about 24,000. This shows you too what a lot of people make a mistake at when they adopt something new. They don't give it enough time. These first 20 to 40 trades will probably represent about a month's worth of trading. And that's almost exactly the time that people will ditch something new and go on to something else, the next bright, shiny thing. Instead of staying with something that's tried and true, even though they haven't discovered yet that it's tried and true, they'll dump it and go on to something else. Another fellow that I was coaching had exactly that problem, and I'm sorry to say I was never able to break him of it. Every month he would come back to me and he'd say, "Hey, Eric, have you checked this out? Take a look at this." Yeah, I've seen that. You don't need that. What you need to do is you need to learn what you have. No, he didn't believe me, so he'd waste another month playing with his latest tool. And then a month later, after that one didn't work, or he didn't stay with it long enough to actually learn how to make it work, he would come back to me with another one. Believe me when I say, folks, this is of paramount importance. Muy importante. If you get a handle on your money management, you will be a successful trader. Look at this. We're doing it with a 50%. You could toss a coin if you had correct money management. And if you don't believe me, paper trade. I'll close today's session with a little story. When we had the trading forum, a public forum, and we don't have the forum anymore thanks to hackers and spammers. They've made forums pretty much obsolete. But when we had a public forum, I challenged, to show people how this worked, I challenged people, give me any market, flip a coin, heads were long, tails were short. And they said, okay, Eric, trade butter. I had a wise guy in the crowd. He said, trade butter. And I said, well, I'm not going to trade butter, but we'll paper trade butter. And so nobody would think I was calling the shots. I said, okay, so-and-so, flip a coin, tell me heads or tails. So heads we bought, tails we sold. By the end of the week, I think it was the end of a couple of weeks, we were up over $1,000 in butter by flipping a coin. No analysis, no nothing else, flipping a coin. I'll tell you another little story, and I see there's a couple questions here, which I'll get to in a second. I met a day trader just recently who lives not too far, or lives in my area here, and that might not seem like a big deal, but you know that traders were kind of like hermits, right? You don't really come across a whole lot of other traders. And so, of course, you start asking about their trading methodology and so on and so forth. And do you know what this person used? I hate to even say it. They traded by how they felt. I'm serious. I am dead serious, folks. They traded by how they felt. They would look at the chart and they would analyze their feelings, and if they felt like the market would go higher, they would buy. If they felt like it would go lower, they would sell. No word of a lie. This person was doing a $100,000 renovation on their oceanfront property and paying cash for the whole thing. I'm dead serious. Do you know what that person's key to success was? It was not that they had really good feelings. Their key to success was money management. When I watched how he traded, I said to him, well, it's all money management. He says, oh yes, I'm never greedy. And he was trading on feeling. He was trading on a whim. But he was content to take $50 here, $200 there, never swinging for the fences, and he was trading some stocks I had never even heard of. Oh, I know, Michelle's given some question marks here. Yes, Michelle, it is true. All right, I see there's a few more questions here, and we'll get to those, and then we'll close up the room. Okay, Mark's asking, how does that change like it does if you're not changing the parameters? I think what Mark is referring to is when I click the button here, how come this changes? It's a random program in behind here. So the computer randomly says, okay, winner, $100, winner, $50, loser, $60, loser, winner, and so on. And it randomly assigns values. But as your account size grows, you're able to risk more than 2%, right? You might start with $10,000 and only risk $200 at the get-go. But when you're up here and you're trading $15,000, well, now 2% of your account is $300, right? So you're able to acquire more contracts. It's just like when we were looking at here in the hawk, right? If I set my risk at 2%, now watch what happens. If I frame my trade really tight, let's say I'm going to enter here, I'm going to exit here. This is what most people like to do, right? If I can keep my stops really tight, I won't lose any money, or I'll lose less. Okay, but what Trade Manager does is it restricts the risk, so you're always risking the same. So 2% of my account, don't freak out at this amount. This is 2% of my account, $450. So Trade Manager is saying, yeah, Eric, you can take a $450 hit. It's not going to wipe you out. But look at this. I'm trading 10 contracts. You might be trading 1 or 2. I'm making 10 times as much money as you are if this trade wins. You might make $50. I'll make $500. Now watch what happens. I'm going to set the same entry parameter, but what if I allow the trade a reasonable swing? What if because markets don't go on a straight line, right? I need to give the market a reasonable amount of room to work out. Well, look at this. My risk amount is still approximately the same. Yes, it was 450. Now it's just shy of 400. But look at what has changed is the contract size. What if I want to risk it way down here, way down below that swing low? Oh, look, the risk amount still stays approximately the same. So you see the risk stays constant. What changes is your position size. Which trade has a higher probability of success? This trade with the great big stop, or this trade with the very tight stop? Well, intuitively, it should make sense that the trade with the bigger stop has a much better chance of hitting the profit target than the trade that you make very, very tight. And that's where a lot of people go wrong too. If you're taking a string of losing trades, and again, this is why you should journal your trades, make a note in your trades, would the trade have worked out had you run a bigger stop? Or how big did that stop need to be for the trade to work out? This is a neat exercise to do sometimes when you're in the market open. So here's an opening signal, which we took. How big would our stop have to have been for that signal to work out? So here was our trade, and I'm just going to throw in a stop in here. What I'm interested in is this line down here. Okay, so this signal did work out. It did hit our high probability profit target. But let's pretend for a moment that this signal did not work out. How big would our stop have to be for, let's say our profit target was just below there, for that trade to work out? Well, it looks like our trade would have to be pretty darn big. It would have to be, currently it would have to be way up here, and we still haven't hit our profit objective. Now, normally the market doesn't go sideways like this. Normally what will happen is the market will open. Oops, sorry, went too far. The market will open, it will bounce up a little bit, and it will come down and hit your profit target, and then you can say, oh, okay, I need to be running about a 6-point or 5-point stop, because that looks like that's going to be the swing range for the market today off of my signals. So you can do that as well. But that's how it changes. That's what accounts for these differences here, is that as you're getting more money, even though Joe is plodding along just trading one contract at a time, you're starting to trade 2 and 3, but you're never risking more than you can afford to lose. Jimmy is asking, can you auto trade DTS? No, not at the moment. Again, it's something that we experimented with, but most people were not comfortable with a black box system. You know, ultimately, folks, the best computer is still the one between your ears. That's not to say there won't be an auto trade version in the future, but at the moment, we're not happy with how it's performing. Okay, great question here from Bryce. Bryce asks, is there a site that shows how many contracts you can trade with a certain amount of cash? If I have $9,000 and I want to trade 2 contracts of something, how do I know which future I can trade with 2 contracts? Okay, you're doing it backwards, Bryce. You don't want to keep your contract size constant. What you want to do is you want to keep your risk constant. So if you're trading $9,000, ideally anything less than 5% is considered prudent. 2% is the ideal size. Most money managers agree on that. So if you're trading a $9,000 account and you want to restrict your risk to 2%, you're going to be restricting your trades to $180 risk. So that means if you're trading a market like the NASDAQ, you don't want to keep your risk constant at 2 contracts, or your contract size constant at 2 contracts, because what's going to happen is you're going to go like this. You're going to say, okay, Eric says leave a reasonable stop. Here's my 2 contracts. You're risking $260, but all you can afford to lose is $180. Now, if you're asking about margin requirements, go to the source. Go to the CME group, and you can look up whatever market you're interested in. Let's say you're looking up NASDAQ. So there's the E-mini NASDAQ, and it will have all the contract specifications, margins, and so on. Now, day trading margins are less than the margin that you normally see here, and you'll have to talk to your broker about that. But try not to get hung up on the notion of trading a set amount of contracts. You want to lock in your risk. I dealt with a fellow who said he was trading a $60,000 account, and he said, Eric, I want to trade 6 contracts. Show me how I can trade 6 contracts 3 times a day. And I said to him, well, you don't necessarily always want to trade 6 contracts. You know, sometimes, like look at what's going on here with the NQ trade. Had I run a really tight stop, I would have been stopped for a loss already. But because I've run a reasonable stop below a major swing low, this trade may actually work out in my favor. But even if it doesn't, I am still not incurring more of a loss than I can afford. Right? That's of huge importance. And if it gets up a few more ticks and trips the break even and comes back, stops me out at break even, not a big deal. But this, you need to keep your risk constant. Very, very important concept, folks. Michelle is asking, so Eric, by money management, you mean just stick to the 2% risk with most of the trades you take? Yes. Contain your risk, whether it's 1% or 2% or 4%, ideally 5% or less. And it is a sliding scale. You know, I worked with a fellow who had a $300,000 trading account. We only risk 0.25% of his capital on any single trade. There was no point in risking 2% of his capital. He didn't need to. I've worked with people who are trading $5,000 and $10,000 accounts. Well, unfortunately, you need to risk a higher percentage of your trading capital or you won't be able to take any trades. Craig is asking, Eric, how do I change the location of the prices, profit and risk when setting up a trade on the right side, not the left? Sometimes I can't read the risk or entry. Okay, I think what you're referring to is here on the trade manager. You'll notice that when I place my orders, they all show up here on the right-hand side. To do that, go here to your strategies. Go to your trade manager. Remember, you need to turn it off to make any changes. And then go up here to order text parameters. And you're going to see, I changed my font size. This is more for your benefit. I changed it to 14. But the one you're interested in is here, entry text position. Yours is going to say left. Change it to right. And then remember to turn your trade manager back on. And now everything should show up on the right side. Okay. Oh, Craig's asking, when is the room going to open? It's scheduled to open Monday. And the information for signing up should be going out. If you haven't received it by the weekend, you can shoot an email to adam@indicatorwarehouse.com. Yeah, Andy says it's, I think Andy's referring here to the money expert. He says he's pretty impressed with it. This makes a huge difference, folks. And if you click on the chart, you can see how the trades broke down. And you can see here for the first 24 trades, there was no difference between what Joe did or what we did. We were moving lockstep with him. Then we did a little bit better. Then we kind of moving together in unison again. Oh, we did a little better. And look how it changes, how all of a sudden we're running away from him by Joe trading his one lot all the time, and we're starting to correctly capitalize our trades and do a little bit better. I could tell you story after story of people who have come to me and said, you know, Eric, all these years, I won a little, I lost a little, I could never make any progress until I started correctly capitalizing my trades. And now all of a sudden I'm making real money. Because, you know, the problem is we'll go in and the first time we'll trade 3 contracts. And what if we take a loser? Oh, great. Now I'm behind the 8 ball. Okay, I'll trade 2 contracts. Guess what? Another loser. Oh, nuts. Now I'm really behind the 8 ball. I better get careful. I'll trade 1 contract. What happens? It's a winner, but it's not enough to offset the 5 contracts you just lost on, is it? No. And so you keep doing that, and eventually you end up to a point where you can't trade anymore, or you're wondering why you can't make any money. Salish, forgive me if I'm mispronouncing your name, asks, is there a way to reduce the size of the trade manager? Not that I'm aware of. I know if you're trading off of a laptop, screen real estate is paramount, but you can hide it. So if you're trading on a smaller screen, what I suggest you do is go like that. And then when you get a trade set up, you can turn your trade manager on, set your entry parameters, hit your submit, and you're good to go. And if you don't need it, then you can just hide it. Okay, a couple more questions, and then we're going to wrap up the room. Yeah, so here's another question. Similar, Mark just asked, just curious, what screen size do you use when trading? I'm concerned about the amount of screen real estate I have available with a 16-inch screen on a laptop if I get DTS. I'm trading, I've got 2 24-inch monitors, and I know some people who like to run a 24-inch for each screen. I don't think that's necessary myself. I don't mind, you know, expanding the charts as I need them. If you are running a 16-inch monitor, like I said, you can either hide the trade manager or buy yourself, this is what a lot of people who are running laptops will do, is they'll buy themselves an extra monitor. Monitors are so cheap now. And so just get yourself an extra monitor, a 21 or a 24-inch, just plug it in, and you'll have all the real estate you need between the monitor on the laptop and the additional monitor. And like I said, they're so cheap. For $100 or certainly less than $150, you can get yourself a very decent monitor. And on that note, I think we're going to wrap things up here today. Thank you very much for your attendance, folks. I hope that you took a little something away from today's session. Kind of a quiet day for the most part. If you are choosing to trade this afternoon, well, we're still sideways. You know, until we get out of the sideways range, I don't see much point in trying to do anything with this market. We're challenging the bottom end of the trading range. There's the top end. We're just kind of stuck in here. I was going to say I would expect the market to decline a little bit. It's struggling to go higher, which makes me think it wants to go lower. But we'll see. All right. So have yourselves a great day. And I hope to see you at next week's open house. If you have any questions, please feel free to shoot me an email. I'll get you my email address. It's Eric at supportandresistance.com. Okay, you guys, have yourselves a wonderful day. We will talk to you later. Bye for now.